Well, good morning, everybody. Happy Thursday. This is Justin Wood with your weekly update. We're going to go and get started. Mark is out this week, building his mortgage knowledge as a lender. So I'm filling in as the production manager for the Mortgage Mark team. For those of you who don't know me and see me on the previous slides, my name is Justin Wood. I'm the production manager for our branch here in DFW and a part of the Mortgage Mark team as well. So let's get started with this week's presentation, and a happy Veterans Day to everybody as well. So let's go. All right, so weekly rates. This week, not a whole lot of movement. At the end of last week, of course, today the bond market is closed with Veterans Day. So just give you a quick snapshot. 30 years sitting right under that 2.98%. Of course, these are all from FreddieMac.com. The 15 years at 2.25 with 0.6% in fees, and then the 5/1 ARM at 2.53. So seeing a little bit more favorable rates in the ARM rates, and that usually happens when rates do start to increase a little bit. So just something to be aware of too when you're looking at, building that long-term strategy with your loan officer, and as far as what we can do to plan for your future and make the best decision for your household. All right, so let's take a look at the charts with mortgage-backed securities. Now, if you're a data nerd like me, you love this stuff because you can look at all the stochastic indicators and see these charts for the mortgage-backed securities. So as you can see, mortgage bonds got hit a little bit the past week, and we started to see some of these stochastic indicators going on that we were in over bought territory. And that's exactly what happened, guys, if you take a look at the charts here. So you can see on that November the 6th, there was a big green. We call that a bull pattern. Bulls want them to go up. And then it almost got swallowed up by a bullish or a bearish engulfing pattern to bring mortgage bonds down to the Fibonacci level. So all is to say, had a big day yesterday, moving in the negative direction. But guys, rates are still at all-time lows. So when this moves this much, it's okay because we do expect some rebound. But just be in mind too when you're looking at stochastics. And of course, I'm happy to share that with anybody who would like to go through that. But just keep an eye on your mortgage bonds and work with somebody like us on our team to make sure you're making the best decision. Now, what's new in the news, right? That's why we're here. This is a weekly update. So let's talk about it. And the number one thing going on right now, if you've turned your TV on, it is inflation, guys. So inflation and pricing updates, just to give you an idea, CPI, which is the Consumer Price Index and measures inflation on consumer levels, rose 0.9% in October, an increase from 5.4 to 6.2% year over year. Guys, that is the largest increase in 30 years for a basket of goods. So when you look at this top right of the chart, you'll notice that here's the bucket as far as, like good stores, prices, and trends, right? Orange juice, chicken breast, bacon, chicken eggs per dozen, fresh ground beef, and bread loaf. Guys, the price trend with the increase from the product of orange juice increased by 14 cents from 3.56, from eggs 2.32 to 29 cents. Chicken breast, obviously we have Thanksgiving coming up, so that's going to be going up a little bit, maybe something on the menu for you. That has gone up 34%. And then you're looking at ground beef up $1.23. So may not be a whole lot of red meat for Thanksgiving coming up this week. Bacon up $1.06, and then bread up 16 cents, guys. So I know Mark talked about a couple of weeks ago that loaf of bread during the inflation going on in Germany, way back in the 30s and 40s with the hyperinflation. And the bread loaf costs like $1 million, right? Something ridiculous. Well, hopefully it doesn't get to that, but it is showing you that the core reading, which does strip out food and energy prices, rose 0.6% and jumped from 4% to 4.6% year over year basis. So increase in wages are great. A lot of companies are feeling that too with retail, or getting, workers to go back and actually work in the restaurants and the food industries, or really just any kind of, jobs right now, which are being created at a rapid pace. But the higher wages they're paying, that's ultimately getting passed on to us as consumers with the cost of goods that they increase. So just be mindful of that too, and maybe time to shop a little more frugal this year as far as groceries. Okay, so let's look at what the housing market's doing, right? The Global Price Index report showed home prices were up 10.6%. That's across the world. Fascinating, 10% across the entire world. Rents did rise 0.4% in October and 2.7% on a year over year, which is up 2.4%. Now, the MBA data does show that apps to purchase were up 3%, and year over year purchases are still down about 4%, and probably has a lot to do with the decline in inventory, right? So we are seeing some stragglers for refinances. They did rise 7% last week in response to the decline in rates, but they're now 28% lower than they were this time last year. So refinances make up 63% of total transactions, up from 62%. And it probably has a lot to do with the aggressive appreciation that we experienced the past year. Think about it. If you bought a home at the early part of 2020 or even early next year, and maybe had PMI or mortgage insurance or something like that, to where you've now made a decision to try to get rid of that and ride that appreciation rate of 10%. So refinances we're always open to, and purchases as well. So make sure you talk to someone on the Mortgage Mark team, so that way we can help you get the best information and see if a refinance is right for you while rates are still good. So employment updates and unemployment, I guess they go hand in hand, right? The initial jobless claims are down 4,000 to 267,000, which is the lowest reading since before the pandemic. Let me repeat that. Initial jobless claims are down to pre-pandemic levels, which is incredible. Now, the continuing claims have increased 59,000 to 2.16 million, but now 2.57 million people are receiving benefits, which is still down 107,000 from last week. So the economy is improving. We can see that with the availability of jobs, and the unemployment claims are starting to file out and follow suit. Now, the labor force participation rate, that's the big one, right? It's only 61.6% when they measured this data. That's a 50-year low, guys. That is since 1970. That's an indication that yes, jobs are out there, but people just aren't participating in the labor force right now, whether that's the holidays upcoming or just finding different means to go back to work or whatever it may be. It's causing a big strain on what we're seeing going on in the employment market too. Now, the average hourly earnings and weekly earnings are both up 5% year over year, but that's just so people will come back to work, right? So be mindful of that too when you're looking at that, and understand that, with everything going on in this market, it's a lot of uncertainty going forward. What we do know though, from the mortgages standpoint, is that rates are still really good, still a great opportunity to buy or to refinance. So please reach out to us and let us know if we can help. And of course, I would be remiss if I didn't mention that today is Veterans Day. So the Mortgage Mark team just wants to send an absolute salute and appreciation to our veterans. Thank you for your service. I cannot say enough that we get to do what we do in the United States on a day-to-day basis because of the things that you do to allow us to do the things that we want to do. So wholeheartedly thank you from the bottom of our heart. And to those who have served, we are an excellent resource for VA loans. Shameless plug, but just letting you know that we are here to help too. Guys, thank you so much for checking in. Have a fantastic weekend, and we'll see you next week.